Another stock we've been tracking at this hour is Pfizer. Now, this is a company that has struggled to win over investors over the past year. Remember, they were one of the big winners during the pandemic with their COVID vaccines. But increasingly, investors have been asking, what is next? Well, the company is trying to rebuild trust with those investors. And let's get some more perspective from Lee Brown, who covers the healthcare sector at global research firm Third Bridge. Lee, it's great to have you with us. First off, tell us about Pfizer in the post-COVID world. What have they been trying to do?
Yeah, thanks, John, for having me on. Look, I think they delivered a really nice print. They've got a lot of initiatives going on. One, I would say, is their cost savings initiative. It's the leadership team's executing to this plan to perfection. You've seen it in the gross margin. It's what allowed for the significant EPS beat. They also have a really great pipeline and a few key products that are working really well. I think it's important to note that if you pull back the pandemic-related sales tied to Comirnaty and Paxlovid, a company of this size generated Q2 revenue that increased 14% year over year. I find that compelling.
Compelling because at the end of the day, they've got like a big stable of brands and they have sort of a long track record of being able to make them sing. What's the most compelling part of that story?
Well, sure. So when you think about the success the company had during the pandemic, and again, this was tied to Comirnaty and Paxlovid, we're just working through what the street calls difficult year-over-year comparisons or comps. So to normalize performance, what we generally do is back out the impact of that those pandemic sales. And what I would say is, if you're focusing on Q2 revenue of 13.3 million, that was up just 2% year over year. Hey, it still beat the street, which was expecting a flat performance. But again, if you were to normalize X the pandemic-related sales, 14% year over year top line growth for a company of this size is pretty strong. That was my point.
Got it. And I guess is it as much about the roadmap, what their game plan is post-COVID versus the fact that we've been in a market cycle? It has felt like unless you've got a leading weight loss drug in your portfolio, you have struggled as a healthcare or a pharma play to get investor attention. Is there any consideration there?
Yeah, I think that's fair. Let me go into a few key products, and we'll get to the portfolio, the pipeline portfolio. But I want to just wrap up what they delivered in Q2 just briefly. So in terms of the bottom line, they delivered Q2 adjusted EPS of 60 cents. Now, yes, that declined 11% year over year, but keep in mind it crushed consensus of 46 cents by 30%. And the reason why that was so strong is due to expanding gross margin. Gross margin increased by 280 basis points year over year to 79.2% on an adjusted basis. So I think that's strong. And on the heels of the performance, they not only increased full year 2024 revenue guidance by $1 billion to 61 billion, but they also bumped up adjusted EPS for the full year by 30 cents to $2.55. So perhaps some of the disappointment that we're seeing in the market right now is the fact that the beat was greater than the raise. Again, they beat by 46 cents. They only raised by 30 cents. But typically, management teams aren't going to take all of that upside and put it into the outlook. In terms of the portfolio, I'd say our specialists remain very excited by what they call the Vyndaqel family. That's just because it's branded as Vyndaqel and Vandamax. Q2 sales rocketed nearly 70% year over year to over 1.3 billion at top consensus by 19%. When you have a drug of that size growing that fast and beating consensus by that much, I think that's something to keep an eye out. This is a drug that is experiencing very strong market demand tied to its indication to treat what's called ATTR-CM. This is a progressive heart muscle disease that occurs through the buildup of misfolded proteins. I also want to talk about quickly Prevnar, which their key formulations referred to as Prevnar 20. Now, this is a vaccine to prevent pneumonia. Q2 revenue did decline 5% year over year to 1.36 billion, but we'll note that government purchases tend to impact performance on a year over year basis. And where we're focused in is on the U.S. pediatric segment, where Prevnar 20 continues to dominate. And in fact, U.S. market share is now over 80%.
Okay. Now, one other question I have, really helpful stuff there. One last question I have for you. We've only got about a minute left, but interesting point in time. A lot of talk about interest rates in the U.S., over time coming down. Pfizer has a pretty attractive dividend yield. They have a pretty good track record with dividend growth. Bloomberg data is suggesting that they're going to grow their dividend over the next few years, not by huge amounts, but how should that factor into an investor decision on a company like Pfizer, in your opinion?
John, I think everything you're spot on. Let me address that. But first, let me just mention the GLP-1 category, which gets all the buzz. Eli Lilly and Novo Nordisk. Of course, Pfizer came out and said they established their own DTC, direct-to-consumer platform just today. This is to cut middlemen like pharmacy benefit managers. Lilly did the same thing with Lilly Direct, and I just want to mention they are advancing the development of their once-daily formulation of their oral GLP-1, danuglipron. This is post-phase 2 studies, and they're going to move it into a study to evaluate multiple ascending doses. Of course, everyone's excited about an oral versus a auto-injector via subcutaneous injection. But in terms of the market, again, I get this question all the time. It really depends on your outlook. Yes, we expect interest rates. It looks like that's going to happen. So it really comes down to, are we thinking about a soft landing? Are we thinking about a more worrisome environment where we potentially sink into a recession? Obviously, large cap, mega cap pharma is a defensive sector. It's also a bond proxy that will benefit for a declining interest rate environment. Great balance sheet, great free cash flow, very well diversified portfolio. So for a lot of reasons, pharma is benefiting from capital rotating into the sector.